The broadcast is now starting. All attendees are in listen-only mode.
Hi everyone, welcome to the webinar. Ron here, and we'll go over some charts and show you where to buy, to sell, put your stop loss, and the no trade zones. So we'll take a look at everything here, and we'll take a look at three different charts, three different types of charts. I like that 120-minute daily chart, especially for swing trading stocks, swing trading stocks only, not for futures. It's going to work real well. And we use AbleTrend TS on the lower time frame. We use AbleTrend 3 on the higher time frame. When we use an intraday charts, 1 minute, 3 minute, or any intraday charts, we always use TS on both time frames. But when we start to get into daily or higher, we use AbleTrend 3 on the higher time frame. And this works really well. So we got XMLV, just an ETF, one of my favorite ETFs that I personally like. And I want to show you, this is interesting, and this is a point that's been brought up actually quite a bit, especially on the E-mini charts. Here's the first time, and the rule is first time you get a blue bar, blue dot, blue X, and I'm talking small dot now. Blue dot, blue small X, blue price bar, right there. Here's the triple confirmation. You got three different indicators and two different time frames all agreeing. That's exactly what we want. We want to stack the odds in our favor. And that's what that means. And it's the same rules, by the way, same colors, same dots, no matter what you're trading. So this could just as easily be a mini NASDAQ chart or any other chart. It's always the same rules. The point I'm making here is when the bar is open, the colors can change because the prices are moving and the software is doing all the calculations. Once the bar closes, it's final. It will never ever change colors again. Now, you see how you have the first big blue X over here. Anytime until this bar closes, and it always comes in, as you can see, right at the beginning of the day here. Technically speaking, anytime on this day right here that I'm pointing to, it could change because the prices are moving and the calculations are being done. Once the next day starts and this X shows up, this one's final. It will never ever change again. So it's the same thing when you have a 1 minute, 3 minute chart. And I'll get to that in a minute. Technically speaking, when you have a trend change, you have, and the point is you got the red X here, you got the blue X. Now, you technically have to wait 3 minutes until that's over. And you know what? Let me just jump into this right away. Once the price gets, here's the blue X's now. Stay with me. Once the prices get under the blue X's, breaks below that support point, which is a strong wall of support blocking the price from going lower, even though the X just came in right now and you have that triple confirmation that we've been talking about for years, red bar, red dot, red X, take the trade. You say, well, but sometimes, the price then pops back up again and then the X goes to blue. That's okay. That's okay. At that time, as long as the price is under that blue X and you've broken through support, as the close of this first red bar, I'm not going to spend an hour on this. I'm just going to hope you're clear on it. And if not, you can always call me tomorrow. We can go over it again. At the close of that red bar, you have a red bar, a red small dot, a red X. You're in the trade. Done. That's the way to play that. Because some people ask, and a good question, by the way, that they're asking. It makes sense. I'd ask the same thing too. When you're in that tricky spot, that inflection point, when you're right on the cusp of going from blue X to red X. So real important there. I just wanted to bring that out. That's how we do it. Got to be below the blue X. You're in on that first bar. Or the same way, obviously, the same thing would be true if we're above the red X going along. We'd be in there too. So obviously the same thing. But that's a good example right there. Just getting a lot of questions on that. If you don't understand what I'm talking about, then just let it go. But for some people, they were a little unsure on that. We're unclear. And again, good questions. Makes perfect sense. Let's go back to that chart. You got your XMLV here. Up and away it goes. I mean, this thing just took off like a rocket and just keeps on going. So again, you want to put your stop losses. Now, if you're in for a short trade, you're the type that you don't like to stay in more than a couple days at a time. There's your third green bar. For some of you who like to stay in longer term, myself included, then just going to use our normal stops. For example, when the price is here, there's the blue dot under the price. Never put your stop there. Always put it 2 steps down. Second lower row, previous lower row. I don't know how else to make that clear. Second step down. These kind of look like you're walking up steps. Don't put it on the first step right there. Put it on the second step, the previous lower row of blue dots under the price. And then, up and almost stopped out here, but not quite. And we're going to keep staying in this one. We got the stop right here at about 47, and we got in this one at about 44.5. Doesn't move a lot, but it's kind of like slow and steady. I like that. Okay, we're going to take a look at crude oil right here. Big time day on crude oil. Crude oil gets moving, really gets rocking about 7 o'clock in the morning Eastern time. But we had a nice little pop in here, nice section. Here's an obvious no trade zone. What the software is telling us here is there's resistance above an invisible wall, support below the blue dots, an invisible wall. The prices get stuck in the middle. That's exactly what happened. But once it broke below support here, we were off to the races here. And there's your perfect triple confirmation trade. Now, stop losses go on the top of the red bar. I put it 1 tick above the red dot. 1 tick above the top of the red bar is where you're going to put your stop loss. 1 tick above the top of the red bar is where you put your stop loss. And this one was a home run from there. I mean, this thing just really shot down. Crude oil, moves fast. So I would use the 3 green bar exit strategy on that one. But from here to here, we picked up 70 cents. That was a $700 winner. AbleTrend gave me, you, and everyone else trading this today. From 10.50 to 11.20. I mean, that's a nice little trade. That's a half hour. That's a sweet one there. That's beautiful. And where do you get back in again? On a sweet spot. Now, there was no true sweet spots, because a true sweet spot is when the green bar comes up and touches that red dot. Then it goes back even a green bar goes up. Any one of the price touches the red dot, tests resistance, bounces off of it, then goes back to a red bar. We would be short again. But that's not a real true sweet spot. Obvious no trade zone. Here's that perfect combination we're looking for. Keep it simple. Don't look at multiple time frames. Don't look at multiple different indicators. Don't look at other programs. Just keep it simple, because simple works the best. It's nothing more than triple confirmation, otherwise no trade. There's no exception to that rule. Red bar, red dot, red X. Some people use big dots there. Fine. I'm making them X's because I want to make it easy for me to explain. I want to make it get clearer for some people who are a little bit unsure. Red dot, red bar, red X. Triple confirmation. At the close of that red bar, the open of the next bar, we're buying that, we're shorting that at market, top of the red bar, or a tick above is where we're putting our stop loss. Again, this is crude for crude E-minis. I would use the 3 green bar exit, and there you go right there. Pick up another 10 cents there. That's $100 per contract. No trade zone, and then, we kind of got into, there's a trade right there. We gave back about 5 cents on that trade, and that's okay. They're going to be losing trades, guarantee you that. No trade in here. There's no X. There's no red X. Got a red bar and a red dot. No X. I'm going to go long there. That one worked out good, and this was a killer trade right there. Blue bar, blue dot, blue X. Stop loss goes on the bottom of the blue bar. It's the opposite of the short. Obviously, you get the long. The bottom of the blue bar, or 1 tick below it, we're going to put our stop loss. Now, we'd be out over there, but we'd be right back in again there. That's a sweet spot. That's a perfect sweet spot. It doesn't matter what chart we're looking at. Just want you to, this could be any chart. It doesn't matter. It's a crude oil chart, but it could just as well be an E-mini chart. It's the same colors. You get the same dots. You get the same, rules on every chart. So the most important point is knowing what to look for when you're looking at the chart. There's a sweet spot right there, blue bar, blue dot, blue X. And that one took off, and that was a beauty right there. That worked out great. There's your third green bar exit, and that one picked up about 25 points. That's $250 per contract in 25 minutes. Pretty cool stuff. Okay, I'm supposed to keep these at 15 minutes, and we're already 11 minutes in. So I'm going to jump in here on the ES. Let me just get to a couple of real quick questions. David's asking, Ron, I swing trade stocks, 60-180. What are the recommended AbleTrend setups for this? Again, anything intraday, any numbered charts, intraday, Dave, you're going to use AbleTrend TS for the lower and the upper time frame. You may want to take a look at the 2-hour, which is 120-minute, and daily. Just my personal favorite. Doesn't matter because I like it. It's just personal preference. But I like the 2-hour daily chart a lot for swing trading. But 160, 180, perfectly fine also. You use AbleTrend TS on both those charts. We're going to use on the 120 daily that I recommended. We're going to use AbleTrend TS on the 120, AbleTrend 3 on the daily. Mike guessing, does the stop go one tick above, below, right, depending on whether you're short or long, or second small dot? No, always if it's the first red bar, red dot, blue, no, always we changed that months ago, Mike. We're going at the one tick above or one tick below. When you have that first combination of blue bar, blue dot, blue X, red bar, red dot, red X. You're welcome. Would stop on last example go on bottom of bar or second layer? On the sweet spots, then you put your stop loss on the second layer. That's okay. You can go either way on that. Okay, if you're really you really should put it on the second lower blue dot. The second row of blue dots away on a sweet spot. That's where that's supposed to go. However, if it's a long bar, it's just too much risk for you, fine. Put it at the top or the bottom of the bar. That one I'll leave that one up to you on that. We say put it on the second higher dot or second lower dot if it's a sweet spot. If not, if it's a long bar, too far away for your liking, that's okay. No problem. Then put it on the top or bottom of the bar. It's just that sometimes that's almost like a little too close, and you get ticked out. You get stopped out too easily that way. You're welcome, Mike. Here's your E-mini S&P. Really good trade right over here. E-mini, I just find it's been a little smoother than the NQ. Last 2 years in 2017, for one whole year, we recommended the ES. In 2018, last year, for one whole year, we recommended NQ. Right now, it can go either way. I personally find that the ES has been a little better this year. And we don't flip-flop from week to week or month to month. We stick with it. So I've been saying since the beginning of the year, the ES, now, I'm not saying every day, but I like the ES just a little better. Actually, there's not as much volatility. There's more volatility in NQ, which normally we like better, but just finding that the ES has just been a little smoother. So that's just been my personal favorite so far in 2019 for the past 5 weeks of this new year. So you have the big sell, the big move here, and here's another thing: there's usually only one good move a day. Could be two, but there's only usually one big move a day. Unfortunately, if you miss that move, you're probably looking at small moves the rest of the day. Now, I'm just going on percentages now. Here's a good example. I always like to scrunch the chart together. I like to look at a bunch of bars. I don't like to zoom in too close. You know why? You lose the big focus of things that way. Again, just personal preference. But if you look at it like this the whole day, it's like, wow, yeah, you're right. You had this big giant move down right here. I mean, this was a super trade right there. AbleTrend recommended shorting it at like 27.11, and your third green bar exit over here is 27.90. That's a 12-point move. That's $600 for one contract, in a half an hour. In 30 minutes time, software gave all of us $600 if we had the discipline, the patience to wait for it and the discipline to take the trade. Look at that after. Look how it went the rest of the day, or just about the rest of the day, till the last half hour. Look at this mess in here. I mean, that's just a sloppy mess. Yeah, there were some winners. There was definitely some losers, that's for sure. Nobody got beat up. We had stop losses again on, like here. Good example. Bottom of that blue bar. Top of the red bar here. Actually, that one was a winner of a couple points. I'm actually looking for losing trades. Bottom of the blue bar there, lost a point, lost 2 points here. Nobody's getting beat up on these trades for sure, because we've got our stop losses in the right spot. However, it's just, the 30-minute chart has been on and the 60-minute has been on a sell for 2 days now. So what does that tell me? It just tells me that the short trades are going to be a little stronger. It's going to be a little longer and a little stronger. Definitely doesn't mean only take those, because the 30-minute chart's 30 times slower than a 1-minute chart. Heck, you never catch a reversal. And you can see over here at the end of the day, the market reversed. It was a nice little buy signal at the end of the day. That worked out very well. My point is, when you get this big, real long downtrend, I'm not saying always, but you can probably expect some sideways chop after that. Now, luckily with the guidance chart, stayed out of that mess, stayed out of that mess, stayed out of this mess. Another guy, no trade zone here, no trade zone here, no trade zone here. We had 7 no trade zones in about a three-hour period where we had the choppiness. Boy, that certainly kept us out of a lot of trouble. Otherwise, it would have really been a disaster if you didn't have AbleTrend and you didn't have the no trade zones and you weren't trading on triple confirmation only, not double or single like other indicators. We've got triple confirmation: blue bar, blue dot, blue X, or red bar, red dot, red X. It's got to be triple or not interested. We don't take it. There's no exception to that rule, period. And then we had the nice trade at the end of the day, long at 26.97. Here's your third green bar at 27.01. We picked up a nice 4 points or $200 right toward the end of the day, right before the 4 o'clock Eastern time close. But that's all I'm saying is sometimes step back and look at the big picture and you go, okay, now I see kind of why it went choppy. Because that's just the way it usually works. It's not the way I want it to work, but that's the market. We can't move it. We can't do anything about it. All we can do is just take what they give us. And use AbleTrend, because we're definitely going to stack the odds in our favor. Thanks, Michael. And another Mike. Wow, I got 3 Michaels here. And the Mike Z, it took the trade. The red X sell signal, red dot signal on the ES did not come in at 10:48, about 10:51. The red dot, red X. Let me go back real quick and see what he's talking about here. 10:48. Should be right about in here. Yeah, here we go. Right in here. Yeah, right in here. And yeah, well, if it's the next bar over, if it came in at that time, perfectly fine, Michael. You Michael Z. You did the right thing there, and that would have worked out well, because right there is where is your third green bar exit. Just try and stay in. Just try and stay in those trades. That's the key. Tough to do, but trying to good. Michael said he made 6 points on that trade. Okay, good job. Hey, $300 in a half an hour. I'll take that all day long. Okay, I think I answered everybody's question. All right, good job. All right. Well, thanks everyone for being here. Hope I was helpful. I'm here every day. Just call, email, whatever I can do to help you, I will. Nobody likes hearing people win, doing well more than I do. Believe me, you have no idea. Yeah. Okay. Yeah. So I that's what I did. I put the X's instead of dots, and I find that it just maybe do that. It's a little bit more helpful. Real quick, you click on AN for analysis, and right here, I highlight AbleTrend TS. I make the buy stop across, and I make the sell stop across, and then click OK. And instead of big dots, you get crosses. I think it makes it a little clearer for people to see, to know that you have to have a red bar, red small dot, and a red X. Sometimes the big dots, they get confused with the other dots, and I'm just trying to make less confusion. So that's all. You may want to consider, if you have big dots, you may want to consider changing it. That's all. It just might be a little clearer for you. And different data feeds. Another quick reminder. If you're using NinjaTrader data, eSignal data, Infinity data, OEC data, for futures especially, the prices, the data feed from those different sources don't come into AbleTrend or any other indicator at that exact same time. It's different. You have different sources. It's coming in, and they get their data from different sources. So it could be just off by 5 cents here or 1 tick there. It could make a difference in a dot here or a color of a bar here. I mean, 90% of it is the same, but if you're using the exact same data feeds, you will get the exact same chart. Like Michael uses eSignal in the OMM trading room. That's what I use. It's the best data feed. It just, some people find it's a little costly, which is perfectly fine. If you got the free data from Infinity or the included data with Ninja, stick with that. It's fine. 90% of it is the trade. One isn't better than another. I want to stress that. The eSignal data feed or the AbleTrend chart and the Ninja chart, and sometimes they're not 100% the same. They're 90% the same, but sometimes they're not 100. One isn't better than another. It's just slightly different. It's not anybody's fault. It's not the program's fault. It's just that when you use different data feeds, it comes in at different times. There's nothing you can do about that. No, nothing can be changed. There's nothing wrong with that. You can't blame Infinity because their S&P data came in at 2690 at 11:22 in the morning, and eSignal's data came in at 11:26 that same 2690 came in at 11:01 and another 11:22, and another came in at 11:22 and 50 seconds. I'm just making up a weird example, but you get my point. If one is 1 second before the bar closes, think about that. And one comes in 1 second after the bar closes, you know what? You might get a little different result. So don't go crazy with that, because there's nothing you can do about it. It's nobody's fault. It's not the data feed's fault. It's just going to be slightly different. Pick whichever chart you want to trade off of and leave it at that. One more quick one. Mike says, how can I move the X's to above the price? Mine comes in below? I don't understand that. Mike, what you have to do is you just have to make your dots X's. And if you're using NinjaTrader, which I believe you are, you have to do that in Ninja. So, you might want to, if you're not sure how to do that, then just get somebody on the Ninja tech people to change your dots to X's. But there is a feature in Ninja where you can change that. Diana says, could you show again how to change the big dot to the X? You click on Format Indicator, and you click on the 3 minute. See, this is the 3 minute because I know AbleTrend SIG is on my 3 minutes. So this is the AbleTrend TS, and then where it says buy stop, it was a point. I changed it to a cross. And then sell stop, it was a point. I changed it to a cross. And then the dots above and below, those 3 minute dots that come in every 3 minutes, the big dots, blue and red dots, they just turn to X's. So just might be a little clearer. I'm finding a lot of people are finding the X's a little bit clearer. Yeah. And that seems to make sense. Oh, if you have Ninja, then you have to do it in Ninja. Yeah, I don't have Ninja, so you'd have to do it in Ninja. But I know that there is a way. I've done it in Ninja before. So you might just have to check with them on how to do that. But there is a way when you go into, maybe it's data series, and you scroll down on the bottom, you'll see the different colors and dots and X's, and that's where you would do it there. Michael's saying the small arrows, how do you change that? Same thing, Michael, go to format symbol. I click on the little red AN. It's the same thing. And where you have the trend sig, what I did was I made the buy stop an up arrow and the sell stop a down arrow. I believe you have X's. So instead of using, like you have it here, it says cross, just change it to down arrow, obviously for the sell stop, and buy arrow for the up, for the buy stop, up arrow. I mean, that's just how I do it. Just personal preference. Doesn't make it right or wrong, but that's what I like. But I think it might help, instead of using the dots above, the big red dots and the big blue dots, make them big blue X's and red X's and blue X's, for buy stop and sell stop. I think that might avoid confusion. And I know you're in the trading room there, so that might help there too. All right, thanks everyone for being here. Have a good night.